And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, recognised by Euromoney Cash Management Survey 2024 for pioneering cash management solutions for their clients. Good evening. Welcome to the programme. I'm Stephen Grootes, and of course the big news of the day, the medium-term budget policy statement. I've made the point several times today. In a way, bringing us back down to earth with a bump. All of the talk around economic growth, maybe at 3%, kind of going out the window in the medium term. The National Treasury expects 1.8%. Also, much less tax being, well, much less, significantly less tax coming in than was forecast. We'll hear from the SARS Commissioner, Edward Kisvetter, in about 30 seconds on that. One of the questions I suppose to ask is, if you work for the post office, how do you feel this evening? You were told day zero was the 30th of October. That's today. You told everyone you needed more money, and you didn't get it in the medium-term budget policy statement. Just goes to show, really, the policy that Enoch Godongwana, the finance minister, has taken, essentially saying that he is not going to give any more money to SOEs. If you look at how much money has sort of gone down that drain over the last few years, very difficult to blame him, and yet Transnet, of course, does need help. Sunroll did get a little bit of money as well in the medium-term budget policy statement today. The big question, of course, does any of this shift the needle on growth? And we'll ask that question as we go through I can only describe as a long list of guests over the next little while. One other comment, if I may. There was a big announcement today from Pick n Pay and F&B. They've signed a big tie-up. Basically, if you're an F&B private client, or if you have eBucks, you will get points through Pick n Pay. And I have to just say, if it were me and I knew I was going to make a big announcement like that on medium-term budget policy day, I would have picked another day. That's all I'm going to say. 011 8830 702 021 446 0567, and of course voice notes 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Some difficult news coming through in the medium-term budget policy statement today. We still have enormous debt. Our economy is only expected to grow by 1.8% a year over the medium term. And in fact, that's an improved forecast from where we were a few months ago. And then tax revenues nearly 22 billion rand less than what was expected in February. Edward Kisvetter is the Commissioner at South African Revenue Services. Mr. Commissioner, good evening. So what happened in our economy that led to revenues being significantly lower than were expected?
I like the way you frame the question, Stephen, because there's a direct correlation between what happens in the economy with what ultimately happens to tax collection. So let me share with you three areas where there is a marked shift from the assumptions on which the February estimate was based and the actual delivery. The first is that we are under-recovering about 12 billion rand from individual taxes. When the budget estimate was provided, there was an assumption that the wage bill would grow by 8.4%, whereas actually, year-to-date, the wage bill has only grown by 5.4%, therefore 3 percentage points down, lower wages, lower income tax, straight through. That's the one explanation. The second area is that some good news and some bad news. The good news is Eskom is performing better. A lot of rooftop solar has replaced a lot of the traditional diesel generators, which has also meant there is 11% decline in the year-on-year diesel usage, about 1.33 million fewer liters of diesel. And that's good news because obviously it means we have more reliable electricity. But the bad news is that we're using less diesel, therefore diesel levies are lower, and that has given us a 8.4 billion rand dent. And then the third big one is, at the time of the budget, the assumption was that our imports would grow by 1.9%, whereas actually our imports have decreased by 3.7%, and that translates through to import VAT being down and import customs duty being down, and combined that has given us a deficit of 15.7 billion rand. Those are the three biggest contributors towards the downward trend. To offset that slightly, we've had corporate taxes particularly in the middle to smaller business areas that have performed better than expected. And that has added some positive uplift to the numbers in the projection going forward. We think that will carry through. And then, of course, the big shift in the second half of the year is now the two-pot withdrawals are starting to come through. Year to date, we've seen just over 1.6 million applications to which we've given directives. That amounts to about just over 29 billion of funds that will be withdrawn, and that will translate through to a tax of 7.26 billion. And that's just year to date.
So do you expect then that these trends will continue? In other words, the forecast would be, and I realize that your tax target has been revised as well, that you would expect significantly less revenue than the original expectation. In other words, all of these things show that we're going to get less tax than we originally expected for the next 6 months.
Well, there's some swings and roundabouts. As I said, we don't think that the diesel usage will recover, and therefore the fuel levy won't recover. There may be some recovery on individual taxes because of delays in wage negotiations, and where it will finally settle may bring about a little bit of respite. And then, of course, if the consumption improves, it means that there will be more imports, and that will translate through to an uplift in import VAT and customs duties. We don't think at the moment all of this, plus the sustained provisional taxes from companies, will be enough to replace the year-to-date shortfall, which is why the minister has settled on a 22 billion short of the February estimate. And obviously, SARS will continue to apply its administrative functions. We will deploy more data science and AI to not only provide excellent service to taxpayers, but also to improve our ability to detect. One of the things that is noteworthy, Stephen, is that we are performing much worse in debt collection, and that also is a reflection of what's happening in the economy. So we've seen many people not disputing their debts. We've actually worked through more cases this year to date than last year, but more people are asking us for debt repayment arrangements, which also means that we will not recover debt that is due to the state because people are just experiencing hardship.
Mr. Commissioner, thank you so much. Edward Kisvetter, the Commissioner at SARS, 16 minutes after 6. Well, the medium-term budget policy statement, of course, raises all sorts of fascinating political questions. The first big economic speech of a coalition government, for many, many years. Dr. Ngamaram Timka is a political analyst at Nelson Mandela University, has an important view on this.
The three-pronged approach that Minister Godongwana announced today underscores the idea that you have a government that finds itself increasingly having to act in more pragmatic than ideological or ideal ways. When, for example, the broadening of the range of projects in which private sector finance and participation can be incorporated shows that the ANC is having to stimulate the economy in ways that imagine a reduced role for the state. And this is not something that would be celebrated within the ANC.
That is Dr. Ngamaram Timka, political analyst at Nelson Mandela University. Azai Mhlangas, the chief economist at Rand Merchant Bank. Azai, good evening to you. So, lower than expected tax revenue, low predictions for economic growth, still so much debt, political pragmatism perhaps, but I do wonder if this kills the optimism we've had for the last few months. It's a reminder of where we really are.
Look, this is a more sober set of projections that we saw from the MTBPS relative to the February budget. I think it's bringing more realism into what we should expect. And if you look in terms of the actual macro assumptions, they're more in line with what we expect, which means Treasury was a bit more optimistic in February. But broadly speaking, it doesn't bring us anything that is really new. At least, from a reform perspective, there is something that we can look forward for, but it's still tentative because it's a long list of economic reforms that we have had before. All we need is implementation dates, tracking of that implementation, and announcement that this is now delivered, is done and dusted. We are still a little bit, behind as far as that is concerned, particularly on logistics. The reform of how the general governance of municipalities work. That we still need to see a bit more of, detail on how that is going to be done.
I mean, the minister talking about the role of the private sector, Operation Vulindlela, he says the focus will now be on the water sector and local government. When people talk about fixing local government, aren't they trying to apply physics and economics to what is really a political problem? If you don't fix the politics, it doesn't work. And I wonder if we're about to find what the limits of Operation Vulindlela will be.
Look, I think we have to give credit where it's due. It has been successful so far on the energy front. We haven't seen load shedding in more than 5 months. That we have to give credit. We are also seeing some early signs of a turnaround as far as logistics are concerned, but we still need more to be done. We're still very far to see this, the same levels of impact that we've seen in the electricity sector coming through into logistics. Yes, to your point, local government, it's a creature of the politics, and hopefully the rationality is going to prevail given the massive issues that local government and its impact on citizens, because that is the point of interaction of the state with citizens. So the sooner we fix local government, the better for small businesses, the better for the overall economy.
There's no more money for state-owned entities. I think there's some for SANRAL for a very specific project. So, for example, the post office is in danger, I suppose, of being liquidated, really. It said its day zero was, in fact, today. Is he right to basically refuse to give more money to SOEs? I mean, there is a limit to how much money you can pour down a drain.
Look, in general, all the services that can be provided by the private sector in a profitable manner, in an accessible or affordable manner by citizens, the state must put 0 cents in it. So it has to open up to the private sector to actually provide those services. Its job would be to make sure that it's a fair playing field for the different role players, and there's also, it's affordable for many people, including the poorest of the poor, to access the same services. But otherwise, there are, sectors that we know for sure they can be serviced by the private sector without the state being involved, and the state shouldn't devote funds into those sectors.
There's also a plan to encourage its 30,000 senior civil servants to take early retirement. Quite a comment, isn't it, that government can do without 30,000 people?
This is not new. We've had this commitment before. The question is whether it's going to be implementable or not. Over the long term, it does two things. First, it reduces the average cost for the state, but it also creates opportunity and room for younger, skilled individuals to come into the public sector with the skills that are now required, which might replace the old skills the older generation has. So it can provide, some positive benefits. The question is there political willingness and ability to actually implement it.
Zion Planga, thank you, Chief Economist at Rand Merchant Bank. Well, many voices saying many things about the medium-term budget policy statement. Matthew Parks is the spokesperson at the Congress of South African Trade Unions, and he's not happy.
We remain underwhelmed and disappointed by Treasury's continued approach to tackling our deep-seated economic and governance crisis. An economic growth rate of 1.8% will just not create the jobs we badly need. The fundamental challenges facing the nation are a stagnant economy, a 42% unemployment rate which is rising. If we're to set the debt on a sustainable path, we need to grow the economy, slash unemployment, and rebuild the state. But simply repeating the tried and tested approach of painful austerity budget cuts, freezing vacancies won't resolve this. In fact, they will worsen the capacity of the state to provide essential public and municipal services that the economy depends upon.
The view there of COSATU's Matthew Parks. Well, one of the most important parts of the speech, in a way, was that it was the first financial speech, economic speech, given by a finance minister since the formation of a coalition government. Peter Attald-Montalto is Managing Director at Kruth. And Peter, good evening. Could we see any impact of the fact that other parties, and particularly, I suppose, the DA, were involved in the writing of this speech and the policy?
Good evening, Stephen. Well, I think let's just consider the counterfactual. Would this budget document and fiscal framework have been different if the GNU wasn't there and it was just the ANC? I think the answer is probably no, actually. I think we need to recognize Treasury staff drive this process to an incredible degree. I think there are some priority shifts. There's some small extra bits of spending shifting around here and there, maybe down some of the individual GNU members, but not the macro fiscal changes. There's also a very interesting review, actually, of employment and various social policies within this, which perhaps maybe wasn't originally the DA idea and was Treasury's, but will certainly be more interesting with the DA there in Cabinet having some difficult discussions on those sorts of issues. But no, I don't believe the fiscal framework here is fundamentally different to what it otherwise would have been.
I mean, I can't imagine the ANC giving away much on economic policy anyway. It's just not the nature of things. The role of the private sector becoming more important in our economy, Operation Vulindlela, everyone talks about all the time. Does the private sector actually have the appetite to be more involved than it is, unless it affects them? If you're a coal miner, obviously you're going to help at Transnet. But fixing water and local government, I don't know if the private sector would benefit from that.
Oh, I totally disagree. I mean, mining companies have huge interest in local communities and social stability, obviously, around the country and the provision for workers of municipal services around people's sites. The same for water. Currently, companies are having huge problems getting reliable sources of water, both from bulk supplies and from municipal supplies, and so it's hugely invested in that kind of reform. So there is a huge amount going on, and the private sector is involved in all these different factors, obviously both collectively and at an individual company level. The interesting thing, of course, is the huge amount of financing required for that. And what's buried, slightly over-buried in the budget documentation are actually a huge number of reforms on the infrastructure side, including a new guarantee vehicle that's been worked on by Treasury and international financial institutions, which will de-risk the financing of infrastructure, and a range of other reforms, both to the ability of the private sector to invest in infrastructure assets and the way that infrastructure is planned and managed through the state system.
Peter Attald-Montalto, thank you very much indeed for your thoughts, Managing Director at Kruth, and bringing the time to 26 minutes after 6.
The Money Show.
The markets.
Chris Stewart's Portfolio Manager at 91. Chris, good evening. We've already heard the phrase pragmatic being applied to the medium-term budget policy statement. Would you agree with that?
Yeah, good evening, Stephen. I mean, it was a little bit disappointing, I guess, and not so much disappointing in that there was any major slippage relative to, I guess, the line that the market would like to see. And that obviously involves the commitment to fiscal consolidation, which I think was still there, the commitment to running primary budget surpluses, and in time, the commitment to debt stabilization. I guess what was somewhat disappointing was the actual numbers, and the actual numbers indicating a bit of a revenue shortfall and a bit of an expenditure overrun for this year and subsequent years, and that's pushed the fiscal deficit up slightly relative to expectations, and that really reflected a little bit of softness in the currency market and a little bit of softness in the bond market as well. So, saying the right things, the numbers aren't great. I guess the one element of pragmatism or optimism one can draw from it is that, many times in the past we've seen what seems like unrealistic rates of economic growth baked into some of the the projections. At least here we are seeing what looks like relatively conservative assumptions with regard to economic growth, and I think as speakers prior to me have indicated, we need to do a lot better, perhaps, than that if we're going to create the jobs that we need to create. But at least we're not building future budgetary expectations on unrealistic expectations.
Platinum shares, that pendulum swinging the other way after a very strong rally, but certainly significant value coming off Platinum shares today. And in the middle of that, Impala had an update.
Yeah, and I don't think there's anything in Impala's update that drove the share price down 5% today. Production was down on a year-on-year basis, but that was expected by the market. Decent production performance at Rustenburg and Mimosa in Zimbabwe, maybe a little bit less so at Marula, and certainly at Impala Canada. And refined production impacted by, I guess, maintenance at some of the refining facilities, as well as some of the water supply issues that your previous guest was just talking about. Rand Water creating there, some problems with regard to the smelting. But it's much more a case of all of the platinum stocks down today, and that's due to a fairly precipitous fall in PGM prices, which have been yo-yoing of late. And given that these stocks are very marginal, there can be big share price moves as a result of changes in PGM prices. We saw, in particular, the palladium price very strong in the last couple of days as the US was trying to put pressure on the EU to boycott Russian palladium supplies. That story got the palladium price going. It got all the stocks going. That story's fallen away somewhat now. The palladium price down 6% today, and the stock's reacting accordingly.
And then Tiger Brands, a lot of the news flow coming out of their update, of course, around the listeriosis issues, but obviously a big important update for them.
Yeah, I mean, not much news on the listeriosis side, but they came up with their trading update. Remember, they've got a September year-end, so this was their full-year guidance. And somewhat frustratingly, I think, for some of the analysts out there in the market, guiding for headline earnings per share, including discontinued operations, up 3 to 5%. That means a range of somewhere around 18 Rand. Now, the market consensus, as I can see it on Bloomberg's, looking for about 16 Rand 70, but market consensus, of course, excluding discontinued operations. And Tiger Brands haven't disclosed exactly what the contribution from discontinued operations was, which means I think the market left guessing a little bit as to whether the core business is doing better or worse from an earnings perspective. But I think at least some encouraging noises around cost savings, improved GP margins, improved EBIT margins, and improved working capital management, generating net cash flow, improving the balance sheet, working down debt, and the portfolio rationalization process continuing. So the market, sort of sitting on their hands a little bit with regard to Tiger Brands today, but some positives to draw from the trading update, I think.
Chris Stewart, thank you so much. Portfolio manager at 91. A few seconds now after 6:30.
The Money Show
with Stephen Grootes.
16 minutes to 7 or more. Reaction, of course, to the medium-term budget policy statement. I suppose what you would call a big nod from the finance minister to the sort of greater role for the private sector that we're seeing. He spoke about the possibility of the private sector being involved in water provision, for example. Also the second phase of Operation Vulindlela. Busisiwe Mavuso is the CEO at Business Leadership South Africa. Busisiwe, good evening to you and thanks for your time. For you, does this mini-budget change the dial at all? We've heard some of this before, particularly around the role of the private sector.
Stephen, good evening. So I really think that the minister has done a decent job. So I think it's important that he actually emphasized on the need for us to continue on the structural reform agenda. I liked the 4 points that he made, around which National Treasury is actually going to be focusing on. He called it the 4 pillars to lift the economy out of this economic rut: maintaining macroeconomic stability, implementing structural reforms, supporting growth, enhancing infrastructure, and building state capability. And honestly, Stephen, these are the only pillars and way in which we can actually get ourselves out of this economic rut. So the reform agenda, ensuring that we will fix sustainably the problems that we actually have as a country. And he actually has done a decent job under very tough conditions, because the tax revenues have actually decreased, or rather lesser than projected at 22.3 billion rand less. And he actually had to do a very tough balancing act. There had to be difficult trade-offs. And you saw him talking about the revised down growth forecast from 1.3% to 1.1%. So this just tells you how our economy still continues to be under strain. So the importance, therefore, on focusing on the structural reform agenda so that we can start dealing with the issues that have actually constrained our economy is important, and that is how we're actually going to get ourselves out of this as a country.
Okay, so a greater role for the private sector then. There's some things it can do. Maybe it can help with water. Some things I don't think it can do. I mean, I don't see what the private sector can really do about local government when so many of the problems there are surely political.
And there is not much we can do about that. You're absolutely right. So what we can do with local government, I think we can do what we have done with national government. Look at the areas where, they are failing. Water is one of those. I know there's been discussions that we have started with the city of Joburg and city of eThekwini to see if we can assist, with giving them the skills, with providing the resources, with exactly the same kind of support that has been given to national government to ensure that we can actually repair the damage that has been done. I think the insurance industry already is working with COJ, to ensure that the potholes in city of Joburg are actually taken care of. So it's those things, but those things are a means to an end, Stephen. They are not an end in itself. At the end of the day, which is why the 4 pillars of the minister are important. You need to have a government that is capable, that can do what only they can do, And I think the Minister of Water and Sanitation, interestingly enough, before he left his post, the current police minister, was talking about why are we not exploring some of the sections of water provision to actually be given to the private sector to provide, right? Because government doesn't have to do anything. Government needs to focus on what it is good at, and where they are not good at some of the things, then they actually need to give it to the private sector, And I think it's not privatization, Stephen, it's private sector participation. There is a difference. Because then you can't be clearly government can be all things, and they can't do everything. So where they are failing, I don't see why those are actually not outsourced to the private sector so that you can deal with some of the challenges that we're facing.
So what's next? I mean, obviously we look to the budget in February, but if we talk about restructuring, we talk at the same time have a coalition government that is so broad. I just don't know if there's real appetite for restructuring, and everyone's going to start talking about everyone else soon because we've got local government elections in probably less than 2 years' time. Are you still optimistic there will actually be some kind of restructuring?
I'm quite optimistic that we are definitely on the right path. I think what we have chosen to do and to focus on, we need to precisely, focus on those things. I know this to many people, seemingly is a reflection on the government of national unity. It is not, far from it. Government of national unity has brought about clarity, Stephen. They've brought about the necessary levels of energy. They've brought about the vision. They've brought about the focusing on the right things and trying to accelerate that which we need to do to ensure that our economic growth levels actually go up. But what they are not magicians. So we cannot expect them, to actually fix this mess in 150 days, a mess that we have actually taken about 15 years to create. So we're going to have to give them time. These things, they are called structural reforms for a reason. These things take time, the same amount of time that it actually took us to actually mess this up and decimate our economy in the process. It's going to take us that same level of time. But there's unfortunately no short way or shortcuts, in getting this right. You do precisely what you've been doing, and it's going to pay off. Because, when you look at how the international market is actually responding to us, if you look at the fact that our bonds have been re-rated, bond and equities markets have actually been re-rated, the optimism that is actually there, that is important, because then we can start being looked at as South Africa as an investment destination, because we do need that investment. We talk about Transnet, talk about SAPO, we talk about all of these SOEs. You saw Sanral is being given a bailout. You need private sector balance sheet to can actually put in this investment so that our economy doesn't continue to be choked. So focusing on these things, therefore, is precisely what is going to increase investor and business confidence, and that is precisely what we're doing, and it is going to pay off. We are on the right track.
Vusi Mavuso, thank you so much. CEO at Business Leadership South Africa, her thoughts on the medium-term budget policy statement.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, pioneering cash management solutions for our clients, as honored by Euromoney Cash Management Survey 2024.
Still so much to say, of course, about the medium-term budget policy statement. You've heard all of the high policy stuff. What does it mean for you? Is probably the most important question. Lesedi Seforo is the Project Director for Tax Advocacy at the SA Institute of Chartered Accountants. Lesedi, good evening. We started the program with the SARS Commissioner explaining to us why tax revenues were down. But if tax revenues are down, that really shows you that something's happening in the economy, and it might be quite difficult to change that with any kind of policy.
Yeah, thanks, Stephen, and thanks to your viewers. No, that's true. at the start, you're beginning with the GDP growth. That was revised downwards from, I think, 1.3% to 1%. So, I mean, tax revenue generally tends to follow the growth of GDP, but that hasn't happened in this case. So you go over to the tax revenue. I'm sure you were speaking to other people earlier who mentioned that the revenue was revised downwards by 22 billion rand. A big part of that, they were saying, is the fuel levies down by about 4%. Corporate income tax has stayed relatively the same. Personal income tax, that's the money from our salaries and so on and so forth, that's also kind of gone down. So wages haven't really gone up in the last year. And then, of course, ironically, you've got before you had a lot of people importing solar panels and all those energy components. So we were collecting a lot of input VAT on that. And then now, of course, things are better electricity-wise with Eskom. Load shedding seems to have gone away for a while. So therefore, people haven't been importing that much. So the import VAT on those items has also gone down.
It's fascinating because load shedding has ended, less diesel is being sold because people don't need to use generators. There's been this conversation going on for the last, I think, 3 years by my count, to actually reduce the fuel levy or to reduce some of the tax on fuel. This shows you the very big impact that would have. It would be massive to try and make that kind of change.
Yes, in fact, funny enough, I was with a delegation of tax experts from around the world, and then I was speaking to the guy from Germany, and I was saying to him, about a third of our petrol price is fuel levy. And then he said only a third.
Hey.
So it's all relative. I mean, other countries seem to be going through quite a lot and also experiencing high levels of taxation on fuel.
Either way, this would be the wrong moment to try and increase taxes. I mean, there's all sorts of talk about what could happen. There always is. But it would seem to me to be a very difficult time to try and change any kind of tax policy ahead of the budget. Things will have to stay as they are, probably.
That's true, but the easiest way to increase taxes without anybody noticing is not adjusting those
bracket
creep. So from doing that, I mean, earlier this year with the budget speech, the documents revealed that you're looking at an extra 58 billion rand in tax revenue over the medium term, just from not adjusting those tax brackets.
Are there any particular taxes that you can see? I mean, you work in tax advocacy. Not many people I know do that. That if we made a change, it would probably lead to more spending, or it would just have a bigger impact on our economy. I mean, is there anything that stands out from our current system that we should actually have a deeper thought about?
You mean in terms of increasing taxes or
either way?
Reducing? Well, government is planning on, there's currently a global minimum tax bill.
Yeah.
That's the one that's generally internationally recognized as coming from the OECD, where it's trying to tax very big multinationals. And then in the budget documentation earlier this year in February, Treasury did say they're expecting about 80 billion rand, but a lot of tax experts in this field are saying that's rather ambitious.
Lesedi, thank you so much for coming in. Lesedi Seforo, Project Director for Tax Advocacy at the SA Institute of Chartered Accountants. Listening to that, Maya Fisher-French, a personal finance journalist at Maya on Money. Maya, good evening. All of this really shows that government is probably going to have to plan to do more with less, and that's been the story of the last few years. It's tough for everyone, and those tough times, it seems, are going to continue.
Absolutely, and I think, one of the big shifts that I also saw in the budget this year was government, I think, going to be a little bit more realistic about economic growth. And I mean, we've just heard the tax expert, and you would have heard from the SARS commissioner, where I think there was this expectation that salary wage bill would increase by 8.4%. It only increased by 5.4%. So, I think National Treasury has recognized that it's got to start being more realistic about economic growth, which is expecting to only, I think, average 1.8% on average over the next 3 years. So that's really saying, listen, we just don't see this economic growth coming through significantly. We don't see, this happening. And of course, that then also affects, the average South African, because the only way we're going to get rid of unemployment, the only way we're going to get real wage increases is through economic growth. So it is, and for me, that came out very clearly. This is all about economic growth. We can't just keep trying to move money around the board. We have to make more money, and the only way we can do that is through economic growth.
And some of that will happen just because there's no load shedding. Some of that will happen because you can shove more coal and gold through the ports, or platinum, because Transnet works. we still don't have, and Colin Coleman was on our show about 3 weeks ago making this point, we still don't have any real kind of policy change that will lead to economic growth. Nothing seems to be driving that at the moment.
No, it does seem that they're just hoping that the structural reforms will lead to some economic growth. But even within that, I think it is still kept, even those structural reforms are not going to suddenly break open that 6% economic growth that we need. And that is really what the economists have been saying. They said we cannot continue, we're never going to hit the 6%, which is what we actually need to absorb labor and to get rid of unemployment. So for me, I feel very much like we're treading water at the moment. We're just not really going to see something. There's no miracle growth that's suddenly going to appear. And I think that is obviously very, very concerning. And I think what's also concerning is the fact that we're still relying so heavily on social grants and just the social wage. A lot of people get upset. They say, oh, this is austerity budget. It is not. 60% of expenditure is going to go to the social wage. That's health, that's education, all of those things. We may not be getting enough bang for the buck, but a lot of our money is going to that. And we just can't keep, we need that big economic growth. And Stephen, I think it's a huge challenge and it's going to be a big problem, to resolve this unemployment rate.
Maya Fisher-French, thanks so much. Personal finance journalist at Maya on Money. Well, don't forget, from 7:30, your shapeshifter tonight is Ian Fuhr. He founded Sorbet. He founded other things before that, including a record label. Started his first company with his brother when he was just 21. He has a few thoughts about company culture, and I've been thinking about company culture a lot recently because of the era that we're in, where, yes, I can look at my technical producer and I can look at my producers. Do you get to see every day face-to-face the people you work with? Or do you only get to see the people you see at home and you see everyone else on a screen? How do you create a company culture when you're not in the same physical space? One of the questions I'll put to Ian Fuhr in half an hour from now. You're with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, recognized by Euromoney Cash Management Survey 2024 for pioneering cash management solutions for their clients. Good evening. I'm Stephen Grootes. Well, we'll move away from the medium-term budget policy statement and have a look with Graham Codrington, the futurist, around how some countries are actually using budgets essentially to help people through their lives. They're being very clever digitally. I mean, in one case, they make sure that you have one cell phone number for life. I must just say, I never understand, and maybe it's just me, why it is that so many people change their numbers so often. I find it infuriating, but maybe that's because I'm a journalist and I've spent half my life trying to track people down, and maybe they don't want to be tracked down. Maybe that's the reason, but I find it fascinating. Ninja, her name's not Ninja, Wendy Nola, your consumer ninja, she'll be talking about what seems to be quite a violent scam involving funeral insurance. And then your shapeshifter tonight, Ian Fuhr. He's the founder of Sorbet. He's done very, very many interesting things through quite a long career. He'll be talking to you tonight a bit about company culture, about his journey as a shapeshifter, about forming Sorbet. But I'm also fascinated by some of the comments I'm hoping that he'll make about company culture. For him, that's the key thing. And I know plenty of people who, before the pandemic, would talk about companies, not so much in terms of what they earned from them or how productive they were, but about the culture there. There's some companies that have spent an absolute fortune on company culture. How often have you had, people saying, no, this shouldn't be our culture, or this has happened? But how do you actually, I'm going to use this word, intentionally actually change it? We'll ask Ian Fuhr this evening from around 7:30.
The Money Show.
Business Unusual.
Well, Graham Codrington's the futurist and partner at Tomorrow Today. Graham, good evening to you. We've been talking about the medium-term budget policy statement. You've got some examples where governments use their budgets and then clever technology to actually do things that are quite unusual to help their citizens.
Good evening, Stephen. Absolutely. I thought that what we could talk about this evening, I know you've had lots of experts on about our budget, but other countries have done some interesting things. I think it helps if you got that economic engine going and the government's got a little bit of surplus and then can move beyond just dealing with essential issues and can move into, well, let's give an example. You mentioned the country actually is Estonia. where they've got an e-citizen project that basically registers everybody. I think they might slightly overstep the mark because as far as I've heard from a few people I know there, you sort of even register when you're pregnant. And because of the cultural ways in which names and surnames work in Estonia, the government, I think, for some people at least, even suggests a potential name or two that you might use. I don't think it's required, but interesting, isn't it?
That does go a little bit far. And I mean, what happens once they've got that ID number? I mean, you're not born yet, you have an ID number. What can you do with it?
Well, I think the answer basically, as far as the Estonian government is concerned, is everything. So that becomes sort of if you like, the central database point for then all the government services. So when you need to register for school, for example, which you can do pretty much after your baby is born, you get on a waiting list, that number becomes your data point. You're already in the government database. They know where you live. And so things that in South Africa get a little bit chaotic around the beginning of each year and allocating children to schools sort of all happen seamlessly through the system, and you've got years in advance in the system. They're also the country that you spoke about, where that number becomes your phone number. I mean, it kind of makes sense to me. I'm not sure if it's the actual ID number or whether it's another number that's allocated to you, but it makes a lot of sense to me to keep your number for life. And then you can move service providers and change handsets. But I suppose, unless we're running away from journalists like you, the rest of us, I think, would like to keep the same number and not have to change it. It makes a lot of sense to me, I'll be honest.
Well, how many millions of people in South Africa must already have an ID number that ends in 083 and a cell number that begins in 083? I mean, we're kind of halfway
Well, there
there.
we go. I hadn't even thought of that. Now you're halfway there. Add another few digits after that and you've got an ID number and phone number all combined. Now, if we're talking smart technologies and smart countries, I think probably Singapore leads the charge here. They've got a system called Smart Country. And the idea there is that all the various devices that we have, and in particular it's smart watches that they want connected, are all connected to a centralized database. Now again, you've got to trust your government just a little bit in order to get into the system, I suppose, because they take your data, like your blood pressure and body temperature and the number of steps you take and your geolocated data on your phone. And what the system does in the background is attempts to keep you healthy. So it doesn't wait until you get sick and then help you get an appointment with the doctor. It sends you preventative messages to say, Graham, you are going to be sick by Saturday unless you do the following things. And it might be that you don't have enough vitamin D in your system, or maybe you were on a bus and somebody else on the bus had flu, and now you must just make sure you take a bit of extra vitamin C. And again, there's obviously the opportunity for a little bit of over-control by government, and that's why I say there's obviously got to be a whole lot of boundaries and barriers put around that, and maybe more trust than we might have in our government at the moment. But if you do trust your government, the technology is there, then the Singapore Smart Country system is designed to keep the citizens healthy. I suppose it's like what Discovery Vitality or Momentum's schemes, and there are others available, are trying to do for us, but it's doing it for everybody, and it's doing it from government, not just private sector for the people who can afford it.
And Scotland, not always associated with innovation, I say stirring the pot at home, but Scotland looking at a few sort of metrics to government accountability to measure well-being factors for citizens. And I can just imagine the conversation around what is a well-being factor.
Well, exactly right. So I particularly pulled out Scotland because I think some people might be familiar with the Bhutan government. That's a tiny little kingdom principality in Asia, and they were the first guys, probably 20 years ago now, who came up with the idea of, instead of only measuring GDP, gross domestic product, which is very much an economic measurement of activity in the country, they started to also measure GDH, which was gross domestic happiness. And they came up with a number of metrics. And I suppose none of these metrics are sort of things that economists and actuaries might think are totally objective. But it creates a baseline. If you measure certain things, and they had 4 pillars, if I can remember off the top of my head, it had things to do with culture and family and well-being and environmental protection, and there was one other I now forget. But now other countries are picking this up. And Scotland, I'll stir the pot more for you, because I don't associate Scottish people with being the most healthy in the world, maybe happy, and those two things may or may not go together. But I think the Scottish government has realized that, even if it's just a perception internationally, and they've said, well, in addition to all the metrics and the economic data you put out, especially on a budget day, wouldn't it be great if there was maybe just a little block in that 2-page government information sheet we all poured over this morning, if there was a little block which said, but is everybody happy? And if there was just... And you know, we could argue about and debate which measurements we should use, but at least we're asking the question. And we can then measure it year on year, and we can work out what is it that would make us happy as South Africans, and what could we do to improve that happiness. And I think that's a conversation worth having.
A third World Cup. None of this is kind of very expensive. It's actually just IT. Many people are wearing the watches anyway. Those prices are only going to come down. What Estonia is doing, giving everyone a number. I mean, yes, you've got to have trust. Yes, you've got to do that. But none of it's that expensive, surely. I mean, we already have computer systems with so much of our data already as South Africans.
I agree, absolutely, Stephen. And so take the medical one, which might be the one that requires the most sort of hardware intervention. I haven't crunched the numbers as an economist, but imagine all the money that is in everybody's minds about what NHI might be in the future. I'm sure it's a tiny little percentage of that total budget. If we could just put a smart watch on everybody's arm that's measuring health data and link up via, there's Wi-Fi and cell phone signal everywhere already. And I agree with you. It doesn't feel like it would need to be a massive new budget item. I think it's just the political will and the strategic imagination to think that we could do more than just sort of fix the holes in the ship. And that's what I was hoping to just bring to the conversation today, that maybe there's space once we feel like we've settled down with our new government, and maybe that means this time next year, could we as South Africans hope to see something interesting, innovative, future-focused coming out of our country down here on the bottom end of Africa? I'd hope so. For me, it would be great if we could see our government spending our money on these sorts of benefits to get us into the future, rather than just always feel like we're trying to recover from the past.
Graham Codrington, thank you so much. Futurist and partner at Tomorrow Today.
The Money Show.
Consumer Ninja.
Wendy Nola, of course, your consumer ninja, talking tonight about funeral cover. 42% of South Africans reported having funeral cover. That was about 3 years ago, so in the middle of the pandemic. But also, it does show you that something is happening in this industry. Wendy, good evening. Fraud seems to be becoming a big issue in this space, and fraud of a quite violent nature.
Yeah, indeed, Stephen. And I came across this bit of information sort of sideways. So, yeah, I had this case, and as will become apparent quite quickly, I'm not going to be able to name any names of the insurer or of the person who took out a funeral policy. But briefly, not giving too much away, a man was shot dead along with another in a Cape Town township earlier this month. And a relative of one of the men who died contacted me to say that he had taken out a funeral policy with listing quite a number of dependents, including the now deceased man, just 3 days before that fatal shooting, right? In fact, he hadn't even paid the first premium. The first premium was only due tomorrow or Friday. So the payout was supposed to be 60,000 Rand, 30,000 for natural death and 60,000 for unnatural death. And a small amount, about 20,000 of that, was initially paid out, the relative told me, and that paid the undertaker. But the following day, the rest of it was frozen. When they made inquiries, they were told there's an investigation, and they weren't given any other information. And so now, some weeks later, he took up the case with me. And I, in turn, took up the case with the insurer to say what's going on here. And I take up many cases, Stephen, of when there's a delay in payout, because, culturally, in most cases, the funeral has to happen very soon after the death. And so it leaves people having to borrow money, as this relative told me he had to do in this case. So I took it up with the insurer involved. And the answer I got went like this: we understand and empathize with the family during this difficult time. Unfortunately, due to a subpoena from SAPS, we are unable to release any claim funds until their investigation is concluded. As this is an ongoing matter, we're not able to share any further details at this stage. We're truly sorry for the distress this situation has caused and encourage the family to contact the investigating officer at SAPS for updates and additional information. And that's where it ended.
Okay, but what was going on here? So a policy is taken out. 3 days later, one of the people named in it is shot dead. There's 60,000 Rand around here. Before the first premium's even paid. I know I'm naturally cynical, but I don't have to be naturally cynical to join the dots yet.
Well, exactly. So I went back to in fact, no, in giving that, the insurer concerned said, if you would like, we can have an off-the-record conversation to talk about this case and the trends that we're seeing in the rest of the industry. So, of course, I said yes. And so, yes, there's a trend of people, a worrying trend. And I don't think it's that new, but I think it's on the increase of people taking out funeral policies with a long list of people on them, right? Some of them, not all of them, worst case scenarios, then get killed shortly afterwards. But it's people with a dread disease, someone who is going to die imminently. That's what they're looking at. But it's complicated.
So, you'll often have a long list. We can have a big family, whatever it is. I suppose, though, funeral insurance is really supposed to be for the people who have to bear the cost, or the people who have been dependent on the person who dies.
Exactly. So the fact that there's a long list of people is not that unusual, because the person's trying to, prevent their loved ones from having to pay for their funeral, and also for those people. And the list can, with the situation we have in South Africa, one person can easily be supporting in some way another sort of 20 people. And so the idea is that they're protecting themselves from having to pay the funeral costs, because they're realizing that within the family situation, extended family, whatever, they are going to probably be the ones that the relatives are going to turn to and say, you need to pay for this funeral. So it's in the context of South Africa, that is really not an unusual thing. But what the insurers are looking at, and specifically this one that I'm talking about, which is quite a large player in the space, is what if these people listed are not actually financially supporting them at all, right? And that person was never actually dependent on them. When that person then dies soon after the policy was taken out, then the insurers, do a bit of digging, and without going into too much detail, they have quite a lot of quite sophisticated ways of analyzing those relationships with the help of computers and everything. And so what this insurer was saying to me is, we want to drive awareness that if you're going to try and pull this kind of scare, we are probably going to find you.
Okay.
Quite ominous. Yeah.
There are ways of, this all happens after the act of violence, right? After the person is killed in this case.
Or in this case, or if that isn't the case, what happened, in fact, what happened, or just, the person that was quite clearly going to die fairly imminently, kind of thing.
So they could do the verification before. In other words, if I took out a policy on you, they could then today check if that I should actually be on the list. Is kind of where I'm heading.
Or whether I should be on your list, kind of thing. Yeah. So that Muscle said something very interesting. He said something that we are thinking about, and this was my biggest take on Stephen. We are thinking about when the policy holder takes out the contract and gives us the names and ID numbers, etc., of 10 people, say 12 people that they want to be covered, that each one of them, at the time the policy is taken out, where the application is made, they automatically get notified of the fact that, say, you, Stephen, has named me, Wendy, on their policy, and I get told about this. And I get asked whether I accept that or not.
Yeah.
And if I have no relation, if I think, oh, okay, so I'm, fourth stage of whatever kind of cancer, and I see what's happening now. No, I absolutely reject this kind of thing.
Yes.
And I thought, is this imminent? Are we talking 1 year? Are we talking 5 years? He said, no, definitely not 5 years. We've got to enable our technology and everything else. He called it product development, but it's going to happen. And I thought, wow, that actually blew me away, because it makes so much sense, don't you think?
No, of course. Consumer Ninja, Wendy Nola, thank you very much indeed. Really appreciate it. It's fascinating to watch this, and we see these claims happening from time to time, in various cases, in fact, going through the courts at the moment, of what really does look like some kind of insurance fraud involving violence, people actually being killed. In a moment, Ian Fuhr, he's your shapeshifter this evening, founded various companies, started when he was just 21, just gone 7:30.
The Money Show.
Shapeshifters.
Every now and then someone comes along who doesn't just change one industry, but tries to shake up a few. And sometimes they're referred to as serial entrepreneurs, or they have interesting journeys. Many of them, or some of them, see a series of problems and try and have a go at solving many of them. In the case of Ian Fuhr, I think first at one point he just wanted to start a company. Then maybe he didn't quite like the music that was being published, so he started a record company. And then he went and started Sorbet. Along the way, he's done all sorts of other things, particularly interested in the culture of companies. Also has a book out called The Human Bridge. It's about racial healing, and I'm sure you'll agree there are plenty of thoughts and important conversations to have in that arena. He's now CEO at the Hatch Institute. Ian, good evening, and thank you so much for coming in and agreeing to be our shapeshifter tonight.
Hi, Stephen. Thanks so much for having me.
You started your first company when you were just 21, 22?
Yes.
With your brother?
Yes.
So, I presume you came out of school, you were a teenager, and then a couple of years later you started a company. How on earth?
I had very successfully dropped out of university already in between school and that, and I was 22. My older brother came back from America one day. He said, I think we should open a business called Kmart. It's a huge, big sort of departmental discount store. And I really knew nothing about anything. So I said, sure, why not? Bit of a problem in that I didn't know much about trademarks, so we just used their name. And to make matters even worse, we used their logo as well.
Sure.
and we plan to open Kmart in South Africa in June 1976, funny enough. A very famous month in our history.
Yes.
And so because of the uprisings at the time, we had to delay our opening, and we opened on the 1st of July. And I was the only white person there, and I'd come out of a very white, privileged background. I had no idea. My staff were all black, my customers were all black, and we opened the store. It was a bit of a fiasco, I suppose you could call it, because we had advertised the product so cheap. My brother said to me, listen, just cut the prices. And that's what I did. I cut the prices to hell, and half the country arrived. People had never seen prices like that before. And the police thought it was another uprising in the center of town. There were so many people.
Sure.
Yeah, but eventually we managed to get the crowds calm, and they queued it. It was quite an opening. But I think the key for me was that I was young and naive and white and silly, and I really didn't understand how to manage people at that point in time. And so I asked one of the guys to come and help me. His name was Ralph Mamela. I asked him to please help me with this stuff and how to communicate with the staff. And he did that for a while, and then one day he was found handing out pamphlets promoting a consumer boycott of white-owned stores, of which we were obviously a white-owned store. So I was horrified by this. There was my guy, my mentor, who was handing out pamphlets promoting a boycott of our own business, and I called him in, and I just dumped him in from a dizzy height, because in those days you could just fire people. Of course, there was no problem. And then he said, I just want to say one thing, please. And he said, thank you for the job. I appreciate this and all of that. He says, but every day on my way into work or going home, I get harassed by the police.
Sure.
And we are suffering. We can't live in this country anymore. And he said, for me, it's freedom first and work second. And that really shook me up a bit. And I said, okay, now you're going to have to teach me everything you know about South African politics, and I want to know it all. So I started a whole new journey. And he said, that's fine, as long as you come to Soweto and have a look for yourself, which I did. And he took me to his home and his family and the Shabeens and everything else. And that was my own start of my racial healing journey. And it's been going on ever since.
So I think a lifelong journey, perhaps, particularly for white people, I think.
Indeed. Yes.
I'm going to ask you just to bring your microphone a little closer. You can use your hands and just put it closer if that's more comfortable for you. Thank you. So you start this company. You came from a particular community during apartheid. I mean, you grew up in a Jewish community.
Yes.
Did that inform any of this in any way?
Yes and no. And I think, the problem with going to a Jewish school really is that you're isolated from other people, obviously. So you get the Jewish story, as it were, and which was great. I mean, I enjoyed growing up in that environment. But I didn't get to meet anyone of a different race or a different culture. So you grow up in a bit of a bubble, and before long you start believing that you're a bit special and you're different. So when I left school, that's what I thought. I thought we were good and high up there, and that was a problem when I went to the army, of course, because they didn't think so at all. And they had a very different view. And so that was quite an awakening. And so, I think the issue of discrimination and bias and all that started around about that time. And then I really saw it when I started getting into the world of work. And there I found that the people there I found a different world in our world. I didn't know there were two countries in one country because we had been so protected from what was happening in the townships. I just had no idea.
So Kmart ran for how long? I mean, you and your brother?
For a long time, yes. Yeah. It became Supermart in 1986, about 10 years later, because the American Kmart took us to court for the use
They
of
finally worked it out.
They finally worked it out. We tried to defend it, but we couldn't. We lost the case, and we changed it to Supermart. And then Edcon bought Supermart in 2003 and changed it to Jetmart. So that became the Jetmart part of the Edcon group. And when I left, I had nothing to do, and that's when I started thinking about a new business. But throughout the years, I'd always been focused on culture in business. And I was more interested really in the people side of business than in the actual business side itself. I was never educated financially, so I didn't, I certainly was no expert on the finance side of business. But I was looking always at the people side, and developed a culture framework over the years that towards the end of my days at Supermart, I had this culture framework. I had also been consulting on race relations in between in a company called LabourLink, and going out to public companies and doing that. So Sorbet started a little differently to others, because most entrepreneurial ventures, you'll come up with an idea, you'll go out there, you'll test it, you'll get a proof of concept, you'll scale it up, and then you'll build a culture. But I already had my culture. I knew exactly what the culture was going to be like. I just needed a business to put it in. Because I'd built this over the years. And in hindsight, that culture, is what allowed us to grow to 225 franchised outlets.
So, I mean, on one level, a beautician is the ultimate repeat business, right? You're going to come back for new nails. You're going to come back for your hair. If you've got a big thing, whatever it is, you're going to come and do it. But when you talk about a cultural framework, so you talk about a framework of a culture for a business.
Yes.
What do you mean? So is it the way that people are treated? Is it the way that people relate to each other? Is it quite a sort of flat hierarchy? What do you mean?
Yeah, it's all of that really, but I think the key is it's to understand the link and the very strong link between culture and service. So it was always about how do we improve our customer service. And if you don't have a strong culture, if you don't have strong values and a good purpose, and you don't serve people the way they should be served, it's very difficult to deliver the kind of service that you want. So the whole idea was if we could build a strong culture, particularly in a diverse workforce. So we called our culture the soul of Sorbet, and I did all the induction training myself.
So you met every employee?
Every employee.
Sure.
Had to come through my induction training, 3,500 people over a period of about 15 years. And in those sessions, I would help them understand the concepts around values, around purpose, around service, and most importantly, why you come to work. What is the purpose of work? And most people thought the purpose of work was to make money and to make a living. And of course, I think that's what 95% of employees feel. But that's completely wrong, really, because people come to work to serve. That's the bottom line. I think that was the big game changer for me, right? The paradigm shift. And so they come to work to serve, and if they serve well, they'll make the money. So the money always follows the service, not the other way around.
So when you say serve, do you mean serve customers? Do you mean serve their fellow workers?
Serving both, yeah. Particularly the customers, but also internally as well. So you come to work to serve, and you serve to the best of your ability, and then you can expect a reward. But if you come just for the reward, it's never going to deliver service. And because people don't come to work to make money for the shareholders. I've never seen anybody walking in singing joyful songs about how to make money for shareholders. So it's how do we get people inspired to go out there and deliver service. And the critical element of that is, do they have a sense of belonging?
Yeah.
Does every individual in the company, regardless of their backgrounds and their culture and their race and their religion, etc., do they have that sense of belonging? Do they feel trusted and respected? Do they feel that their contributions are valued and they're treated with dignity and fairness, etc., because that will inspire them to go out and serve people well.
So, I mean, there's a lot there because, I mean, I've seen and watched people do things for each other because they're part of a team. I mean, you see it on a sports field very often, but you rarely see it in workplaces. I mean, and that's the sort of the real thing that you want. But does that mean then that people, particularly in a Sorbet experience where you've got franchise after franchise, different outlets, are they working for a team because they're, working at the Sorbet in Sandton? And so they're working for the people who also work at the Sorbet in Sandton. Or they're working as a team because they're working for Sorbet. So if you could take that person and take them to the branch, in Cavendish Square in Cape Town, would they work as hard as what I mean?
Yeah, so I think that's a lot to do with the franchisee and the type of culture that they create within those stores. But the franchisees also attended the induction training, and so they knew exactly what our culture was supposed to look like. And the whole idea, and in fact maybe the reason why it was so difficult to build a beauty salon chain of stores across the country, is because of the inconsistency of service.
Yeah.
So depending on the culture of each store, you might get different service. So I think the challenge was, how do we get that consistency? And that was getting everybody to believe that we come to work to serve the wants and needs of our customers. And if we do that well, then we'll all be satisfied and rewarded well.
Ian Fuhr is your shapeshifter this evening. I'm going to ask him in just a moment about company culture in a virtual age. That's coming next.
The Money Show.
Shapeshifters.
Ian Fuhr, the founder of Sorbet, currently CEO at the Hatch Institute, your shapeshifter this evening. We've been talking a little bit about company culture, and Ian, I really want to get into this a bit if we can. So we live in an era where so many people are working in one place. They're working at home, right? They might have worked for 6 different companies since 2019, but they're still working in the home office. Can you really create a company culture when you're not in the same physical space?
Well, it's a lot harder, that's for sure, Stephen. But I think the interesting thing is that most companies have different views on this. I'm working with a lot of different clients, large and small. Some of them want all their staff to be in every day. Some of them say it's okay to come in twice a week, some 3 times a week. They each have their own sort of strategy around this. But the real challenge of trying to build a culture is the lack of human connection.
Yeah.
So when you're working within an office, you can pop over to the guy next door and have a chat or meet him at the coffee machine or whatever, or your friend. But at home, that's very different. Some people love working at home because they're not distracted. They can really focus and concentrate. Some people hate working at home because the kids are there and it's difficult and they're just not comfortable and they don't know when their work shift ends. And there's lots of different issues here. But the challenge is to try and keep the connection. That's the thing. Human beings need connection. And if you keep them at home for too long, they will start missing that connection. And then you start to disintegrate the culture. So yeah, I think somewhere in between is a happy balance. I'm not exactly sure where that is, to be honest. But all these companies are trying to work it out, and they, largely trial and error in many cases. But there is a risk that culture becomes a little bit diminished through this working at home environment.
I mean, there was a time, I would be able to tell which media organization another reporter had come from just from the way they conducted themselves,
Yes.
Before they even said in a press conference, I'm from XYZ, I would know, you'll be the person, I can see you from the person
Yes,
from XYZ.
right.
I know of other media organizations, I won't mention their name, but a big international company that would have an annual conference, and it was compulsory. If you worked for this company in Joburg or New York or Pyongyang, you had to go to their annual thing, particularly around culture, because that's what they wanted to keep.
Very much so. So lots of companies have that. They have annual conferences. They just want to bring people together so that they can just meet each other. A lot of them don't know each other, so it's an opportunity to meet other people in a larger organization. And even in small organizations, it's just nice to get together and socialize and have a drink and talk about strategy. There's so many nice things that happen with this, and it really does make a difference. That human connection is so critical to building culture. And also it's really important to inspire people. I often used to get asked at Sorbet, how did I motivate 3,500 people there? And my answer to that was, I don't think I motivate any of them, quite frankly, because my job is not to motivate. People must motivate themselves. But my job is to inspire people to motivate themselves. The best leaders in the world are those that can get other people to follow them to places that they would never have gone by themselves. And that's really what you're trying to do all the time. You're trying to get people to keep pushing and growing and breaking through their own barriers that they set above themselves, their own ceilings. So that's what real leadership is. And we call it the moral authority to lead, because the old traditional basis of leadership was pretty much power-based.
Yeah.
I have the power. I'm higher up in the structures. Therefore, I can tell you what to do and how to do it. But now we have to earn that right. We have to earn what we call the moral authority to lead. You have to earn the trust and respect of your people. You have to show them that you are genuinely concerned about them as human beings. You have to show that you are genuinely concerned about their growth and development. And most importantly, you have to create a place of safety in which people can feel free to speak without fear. That's a big one. That's one of the biggest challenges we have in South Africa, because the perceptions of that place of safety are so different. We did a survey recently in a company where the leadership felt about 80% positive that they had created this place of safety where people could speak freely. When we asked the staff, it was 18%.
Sure.
So the perception gap is so huge, and people don't know. It's like a huge blind spot. You think everything's okay because people are not complaining. But we call them the quiet crusaders because they're not happy, but they're just not saying anything because they're afraid.
In a way, it's quite unusual for a business person, someone who's sort of known for starting businesses, to be as interested, maybe let me use the phrase, as involved in discussions and issues around race as you are. And you've spoken about how and where that started for you. And in fact, you have a book out called The Human Bridge about racial healing. You have contributors, Lukhanya Xalata, someone I know well, is part of that. Clearly this for you is a very important thing. I mean, this is part of your reason, isn't it?
Yes, indeed it is. And it has been for many years, since 1976. So I've looked at racial issues throughout my working career and found that they have a massive impact on people and on productivity. If people feel that they're not respected, they will never be as productive as you'd like them to be. So South Africa is one of the most unequal country in the world, as far as I understand. But they also rank 61st out of 65 countries on productivity, so, which is way down there. And in my view, that's because of race. Race virtually touches everything in South Africa in one way or another. And unfortunately, it seems that it's kind of slipping off the radar a little bit. People are saying, why can't we just put it behind us and the apartheid and move forward? And I'm saying no ways, because we don't fully understand the psychological damage that has been created by years and years of this, what I call the hierarchy of human value. And that's that superiority, inferiority thing that still sits with many people in this country. So we've tried to look at economic empowerment, but we haven't really focused on psychological empowerment. And that's where racial healing comes into play. Because the polarization that's been created by systemic racism over so many years needs to be reversed. And it's not being at the moment. So we've moved on from apartheid from a legal perspective, and the laws have changed. But we certainly haven't moved on very far from racial polarization. It's still there. It's still a challenge. And I'm trying my best to not allow people to put it behind them and forget about it and say, listen, we need to address this because we need to understand our history firstly and how we got into this mess in the first place.
Ian Fuhr, thank you very much indeed for coming in. And thank you for sharing your wisdom. Thank you.
Thanks a lot.
Ian Fuhr, you'll know him as founder of Sorbet, CEO at the Hatch Institute.